Hot diggity dog. Nvidia earnings just dropped, folks, and they are feeling hot, hot, hot. I'm going to tell you that right now. Stock up pretty massively, about 6% from after hours trading so far. I'm recording this, at midnight. I hope you like that. I'm recording it at midnight because I'm dedicated to the craft. Really, it's the only time I had available today, but I got to crank out this video. We need to talk about it. Most anticipated earnings this week for me. Obviously, I do have some skin in the game with Nvidia. There's no doubt. Wish my position was larger. There's definitely no doubt about it. But you can see up top here, about a $4,500 position. No big deal, guys. No, I wish it was definitely larger of a position. I only have the 6 shares, and man, one of those times you wish you had a little more. But anyways, let's get into these earnings and see why they shot up quite a bit. If you recall from our earnings preview video for the week, definitely talked about Nvidia, and really the only way that they go up at this point after earnings would be the trifecta, and have to be a pretty significant trifecta. So they're going to beat on top line, bottom line, and the forecast or outlook. So that means obviously EPS is going to beat, the revenue is going to beat, and the outlook's going to be good. Now, here's what I said had to happen. I said it had to be not just a beat, but a pretty significant beat to get the stock to go up. My presumption, just by looking at the stock, reaction here, it was a darn good earnings, and I thought it would be a darn good earnings. I predicted a darn good earnings because this company is in the forefront of really everything right now. Kind of crazy how much growth we're seeing. So I'd love to dig into these numbers with you, and I hope you're along for the ride. So first, I do want to note that it is worth noting Nvidia's had a bit of a downswing here just this week alone. A decent pullback here down to 645 at one point technically, but really it was down to like 660. So seeing it back over the 700s, I'm not shocked. I think it's kind of where it deserves to be. So let's go back on the day chart. You know how it is, and let's take a peek at these earnings because I'm excited, folks. I really am. Microphones even lighting up green and red. Oh baby. So here's what we see. Yeah, I'm sticking to it. T-Mobile trying to sway me over here. Look, I got the Google Pixel and I'm fine with it. I don't need your Galaxy S24. So here we go from an EPS standpoint. Holy smokes. Now that's a beat, folks. $5.16 adjusted versus $4.64 expected. That is what we call a beautiful. Now revenue, this is where we see a massive beat, right? We're talking about a $1.5 billion beat here, which I'm not shocked at all. I expected them to beat this line by over $1 billion because it was already a ridiculously high expectation. But I don't know, the trends are just great, man. I don't know, this revenue here, $22.1 billion against a $20.62 billion estimate. Yeah, that's right. $1.5 billion beat. That is quite significant, right? So, Nvidia says that it expected $24 billion in the current quarter. What the crap? And they were expecting or looking for $5 per share, and $22.17 billion in sales was this LSEG. So, already when I look at an outlook standpoint, that is a fantastic outlook. There is no doubt Q1 for them, expecting such a fantastic look is quite nice. There's no doubt about that. And then we do get a look into really the full year as well, but they reported $12.29 billion in net income during the quarter alone, which is astounding. And you want to know why? It's because of this. From a GAAP standpoint, how does that equate? It was actually $4.93 per share. That is up 769%. Holy smokes. So that is where really the investment thesis is for this company, is that not only is the revenue growing massively, but we're seeing from an actual, fundamental standpoint, this company is growing that bottom line massively, right? They're expanding at a ridiculous rate here. 8 times? 8x your net income? What the heck? Or I guess really in this case it was, 10x, but that's insane. It was 57 cents per share a year ago in the same quarter. $4.93 per share. That is what I would call insane. I mean, it's just being honest here. Obviously, you were talking about a minuscule amount there. You rarely ever see a company that grows by that much of an amount. You're right. We're talking about $10 billion difference there. Again, this company a few years back wasn't profitable. So we're really seeing the company develop from, they're still in hyper growth mode. And normally those companies don't show profitability. That's what kind of makes this a really cool story here. Total revenue rose 265%. Now that again, I told you hyper growth mode. Well, the revenue is growing by, I'm calling this high triple digits. This is ridiculous. We're talking about nearly 4x from a revenue standpoint this quarter. That is absolutely insane. You just don't see that for a company that's making several, tens of billions of dollars. You don't see growth rates like that. It's absolutely wild for me to see something like that. And they say it was really, which is not a shocker, based off of strong sales for AI chips for servers, in particular the company's Hopper chips, such as the H100. And that's not a shocker, and this is going nowhere. I'm being honest, be 100% honest right here. Nvidia is powering AI development. They just 100% are. This is the main company you're looking for when you're looking at AI, and it's obviously an ever expanding and expanding rapidly thing is what AI is. So Nvidia being there is pretty interesting, and that's where you're seeing this 265% growth. So really cool there. Let's take a look at the actual earnings report. First, we got to rate the investor relations page. I look at this. Let's go back to the normal normal homepage. Sorry, it was rude of me. I'm all messed up. Okay, here's the homepage. What do we got? It's a tech company, but pretty boring. It's a pretty boring page. We do have a stock info section, which is nice. We have some buttons that work. Overall, I find it pretty boring. I'm not a big fan of look, this is what's wild. 52-week low on this stock. $204? You could have bought this stock at $204 a year ago? Why didn't you buy more? I'm talking to myself. Anyways. So, nice. The chart's pretty decent. You can go back in time, expand your time frame, whatever you want. Decent charting. I'll give them credit. It's a decent investor relations page. Not anything too special, though. So, for that reason, I'm going to give this one a 7.3. That's right, called it out, 7.3. Pretty decent, but nothing special. I just expect a little more, I guess, out of a tech company. But again, they're just making the chips, I guess. Make your chips and eat them too. I don't think that's the phrase, but it could be. It could be. I would eat my own chips if I made them. There's no doubt. So let's take a look just here at the actual press release by AMC and kind of what we have. Again, at $22.1 billion in record quarterly revenue, no doubt. Record quarterly data center revenue of $18.4 billion, up 27% from Q3 and 409% from a year ago. That's 5 times, baby. That's 5 times if you wanted to know what that represented. That's kind of wild. And then record full year revenue, which isn't a shocker. Full year, they grew revenue by 126%. That's wild. A full year, and they grew it by 126%. Doubled the revenue in year over year. So pretty cool. Definitely so. Again, we saw that GAAP earnings diluted per share was $4.93. To give you that comparison of quarter over quarter, 33% from the previous quarter. Holy smokes, really nice. And then from a full year standpoint, this is one that's honestly wild to me. Um, let's see. Oh, sorry. I don't know if they're doing that just yet. Oh, here it is. Yeah. So the I don't know. That to me is just kind of wild. That $11.36 or $11.93 for the full year, up 586% year over year. That's crazy. We'll see from like a net income standpoint kind of where that stacks up in chart form, because it's one thing to talk about the percentage growth, but it's really cool to see the numbers, and you see it obviously here. We get a quarter over quarter. That 33% growth in net income. You know, I'm a guy who loves net income, because when I talk about a company printing cash, this is what it's all about. It's the net income they generate. And to me, when I see this, just take a look. $22 billion of revenue, $12 billion of net income. Excuse me? That is a ridiculous 50%, over 50% of the revenue they bring in is pure net income. That's what we call printing money, folks. The Fed couldn't do it better if they wanted. The U.S. Treasuries, they just couldn't do it better if they wanted. Okay? Okay? We're printing fake money here, but this is real money that Nvidia is printing. Kind of wild. Yeah. Gross margin at 76% is it's frankly an absurd number. The just the margin here, it's absurd. And here with this, Nvidia pays this next quarterly cash dividend of 4 cents per share. That's obviously just so that way they're paying one. You know, I don't think it matters all that much. That's not a mainstay of the company. Again, they're in hyper growth mode. They're not necessarily focused on this. I do see a time down the road. We're talking, honestly, for a company like this, it's probably not for another 3-4 years that they start increasing this dividend by meaningful amounts, because they're going to wait until the growth starts to stall a little bit. That way, investors aren't really swayed to go elsewhere, because they're going to be paying a dividend, and it'll really just, entice people to stay in the stock and entice new people to come into the stock, kind of like what Meta did, which is why they're at all-time highs and way above where they've ever been. So just smart play by management there for sure. And obviously, we only look at the GAAP perspective. We don't look at this non-GAAP. Get this out of here. If these accounting principles aren't generally accepted, I don't like them. They've got to be generally accepted. That's what I'm going to tell you right now, folks. Don't believe it. And then from a full year perspective, this is beautiful. Full year net income at $29.7 billion. That shows you how much of a wild quarter it was that they had a gross margin of 76%. The full year was 72%. So that, to me, when you look actually from a chart perspective, you can see how much that is growing. Even just on a quarter-to-quarter basis, it's growing significantly. So they're still in their phase of just booming. Every quarter, it's not like it's a slow growth. I mean, this is a growth in every aspect by massive amounts. Really cool to see a company like this. Definitely cool to be a part of, no doubt. But again, yeah, look at that, 581% net income growth. Holy smokes, only $4 billion last year. Holy crap. Get this non-GAAP out of here, brother. I ain't going to do it. Nvidia achieved progress since its previous earnings report in these areas. Nvidia has achieved progress since its previous earnings report. And then, I don't know about this. I just think grammatically we've struggled here a little bit, and I'd love the team to really work on this for the future. Kind of makes me upset. Here they'll talk about some highlights, from a data center perspective, different models and APIs here that they're talking about. And then from a gaming perspective, they'll talk about, obviously chips, including the GeForce RTX 40 Super Geary GPU. That's what I said. Full year revenue just from a gaming standpoint up 15% too. Obviously, the data center is the main piece of the business now, and that's what they're going to talk about a lot. It's the data center. Kind of wild. And then professional visualization. I don't, know too much about the segment, but it's cool. And then automotive, something that people don't obviously consider there. Automotive is the fact that they are partnered with a couple different companies to assist them in their self-driving AI technology. Yeah, that's right. They're everywhere in AI. It's Nvidia. It's it's Nvidia. I was right up in the microphone, whispered it. Hope you liked it. Let's look at a couple charts and call it a freaking night because I'm tired. I close on my house tomorrow, folks. I close on the house actually today at this point. Buying a house makes you have not a lot of time, but here we go. 2024 assets. This is the balance sheet, and that's what I'm talking about all the time. Total assets in general, the company is 65 billion compared to a year ago, 41 billion. It's good when it ends on a fiscal year because they give you the full year-over-year comparison. Obviously, quite a growth here. We're talking about 50% growth in terms of assets. Now the question is, what did liabilities do? In my eyes, obviously they're gonna grow, but I'd love to see them not grow by nearly the same rate. And what a shocker! It's not even close. 19 billion in asset or in liabilities last year. That's right. 22 billion this year. There was not much change at all. The only change was really this accounts payable and this accrued and other current liabilities. They actually decreased the long-term debt. Absolutely astounding from what they're able to do. So shareholder equity increased nearly double, 22 billion to 42 billion. This is already a balance sheet in a ridiculously good position, and this was really prior to them having an extremely profitable time. They're only more and more profitable from here on out. So this balance sheet's actually going to only get better, which is crazy. And it's already, 2/3 of the total balance sheet is shareholder equity anyways, which I love to see. That's a ridiculously good balance sheet. I talk about balance sheets a lot, and I love this. Sound like Creepy Joe, man. So, look, is Nvidia a stock to buy right now? Is it? That's what everyone's going to be asking because this stock is up massively. Again, I showed you 200% in the span of 1 year. Is absolutely wild. Well, I look at the statistics and I want to see what's going on. So, right now, this PE is not going to be accurate. I'll tell you that right now. I'm going to tell you what it's going to be because I did the calculation for you. So, based off the current pricing, even in the after hours movement, and with the full year earnings of 11.93, I calculated this to be right around a 61 PE ratio. And you want to look at the company historically, how it's traded. And again, 61 is actually lower than it's been trading for actually a while now. 61 is. Really, really, honestly, it's kind of cheap. In my opinion, and I always talk valuation. I love valuation. The price to earnings is massive for me. Obviously, the price to sales and price to book are ballooning by a massive amount when you look at that market cap. But when I look from an actual earnings standpoint and price to expected growth, I mean, this is I would say, a cheap company. If we're talking about a company with high triple digit revenue growth, high triple digit, very high triple digit earnings growth, to trade at a PE ratio of 60 and a forward PE ratio, I've calculated here for you with the outlook. Forward PE is going to be under 30 for this company. Even that market cap at $1.6 trillion, the stock, in my eyes, it's still not expensive. It's crazy for me to say that, man. How can I say this stock's not expensive? I just don't know if I can, though, because of the future outlook. In my opinion, if you buy Nvidia today, tomorrow, whatever day, this year, when we look back 5 years from now, when this stock has gone through a stock split, when it's up in 5 years, when this stock is up an additional, I'm telling you right now, in 5 years, the stock's up an additional minimum 200%. Some may say I've lost the plot. I'm insane. I've lost my mind. That's a minimum. I could see this thing being up. Dude, oh man, it's just where do you go from here? I could see being up much higher, but I think you're happy if you buy this investment now and you hold it for years to come. You're going to be a very happy individual down the road. It's hard for me to say this thing's cheap right now because it's not. cheap, but I don't know if it's that overvalued. I just said it, ladies and gents. That's freaking Nvidia for you. I hope you enjoyed this one. Call me insane. Call me insane. I'm gonna enjoy the ride myself. Have a good one. Bye.